This video is on volatility index strategy, and it's going to be a series of videos based on the list of topics I have itemized. The first one is market structure. The second one is point of interest or reference point. Then we look at inducement and entry confirmation. So today we're going to look at market structure. I want to take my time to discuss market structure so that you have a better understanding on how to use market structure in determining the direction of the market. So the market structure is of three types. We have the uptrend, which is also the bullish market structure. We have the downtrend or bearish market structure. Then we have the ranging market structure. That means price is in consolidation. So we are going to start with the uptrend. So the uptrend looks like this. We will see price creating higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this is an uptrend. Why? Because we see price going up. That's why it's called an uptrend. So we can name this uptrend. 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 Or we call it the bullish market structure. In the uptrend market, we will see price creating higher high, and then we'll see price creating higher low. In an uptrend and downtrend market, we'll see price creating higher high, and in downward market is higher low. So here we see price creating higher high, higher low, and then we see the same thing, price repeat again and again. And whenever we see this, we know that price is in an uptrend. As soon as price creates a higher high, let's say if I create another diagram here, we see price creating higher high. Let's say price has created this higher high, something like this. What price leaves us with is we will be left with another block, because price is going to leave us with other block at this level. That is, let's call it OB. We see another block at this level, and then we're expecting, as soon as price started retracing, because to every expansion, which is an impulse, because if price should create a higher high, it is called an impulse. So after every impulse move, let's say impulse or expansion, impulse or expansion move that gives us higher high, we're expecting to see what we call a retracement. So this is an retracement. So we're expecting to see retracement back into the range. So as soon as price started retracing into the range, we will have what we call the order block, and then we're expecting the order block to hold the price. And also, as soon as this retracement commence, price will leave us with what? With an order block here. So you have two order block. One as what? As a bearish order block, and on this leg as a bullish order block. So now, let's say for example, price is here. We see that price created this higher high and then started retracing to our what? To our order block. As soon as price started retracing to our order block, price leaves us with another bearish order block. Bearish order block. Now here we have bullish order block. So, and then if price should retrace, we want to see price being held at this order block. So that means the order block should hold this price. And if that happens, as soon as we see price violated this order block here, this now becomes breaker block. So this order block becomes breaker block, that is BB, right? And then we'll have what we call the break of structure. So what are we expecting as soon as we see a break of structure? Remember, we are left with what we call the breaker block and also what? The order block here. Because now this here it will be our new order block. So we'll be left with what? A breaker block and also an order block here. So what are we expecting? We're expecting another retracement after the impulse move. So if price is retracing, price will either get hold at the breaker block or the order block for another what? Expansion. So here, let's say price entered into the breaker block and then expand again. So we'll be left with what? We'll be left with what we call break of structure. And what do we have? We have here, we have breaker block, we have breaker block, and then we will see our order block here also at this leg. So this is how the market keep on expanding and retracing. As soon as we see price created the retracement, and then all of a sudden price did not hold the breaker block at the breaker block, and then price wasn't hold at the order block, we see a violation of this order block. We now have what we call market structure shift. So here will be what? Will be market structure shift. And this market structure shift will be validated by having a candle closure below the order block. So we want to see candle closure. I will show you that. While when price is creating this higher high, we don't need to see candle closure. It could be a week, just a week of a candle that sweep liquidity for us to have a higher high. So here we could have what we call market structure shift. Remember, this is an order block, but after market structure shift, this becomes a breaker block. So here we will have price coming into the breaker block now, or the order block at this level for bearish move. Now this is what we call market structure shift. And when price break highs and close above highs, we call it what? Break of structure. So this is what we call the uptrend. Now for the downtrend, if price is going bearish, price will be creating lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So what do we have? We have price keeping us with what? Lower low, and then we have lower high. And if this happens, we will definitely see expansion, and then we will see retracement here. Here we have expansion. So expansion, retracement. We are expanding bearish and we are retracing upward for another expansion bearish. So we'll be left with what? Lower low, lower high, lower low, lower high, lower low, lower high, and then we'll see another one here. So this is what we call the bearish market because price is going bearish. So also, for example, we have this price creating lower low, lower high. So what do we have here? Like I've said, we will have here, we have what we call order block, right? And this will be bearish order block. And the next one will be, this will be what? Will be another order block. But because it is violated, we now have a breaker block, bearish breaker block. So what are we expecting? We're expecting price to either retest the bearish breaker block and continue bearish, or come to the order block at this level and continue bearish, because we have a new order block at this level. So here, what I want you to know is that in this market structure, I want you to pay attention to the concept of order block and bearish breaker, because in the subsequent video, we're going to be looking at it intensively. Here, we'll be left with break of structure. So again, we have another what? Break of structure here. Then we're expecting what? We're expecting another leg. And if peradventure we see a break of structure here, and after the break of structure, remember, we'll be left with order block at this level. And also we'll be left with what? A bearish breaker. Remember, this is another block, because price has violated it, it has become a bullish breaker block. So we'll be expecting price to come here and retest the bullish breaker block or bullish order block for expansion bullish. So guys, this is the concept of market structure, and we will see what we call market structure shift at this level, because price has violated and changed direction in the market. So let's get to the read chart and look at it. So here we have the daily time frame on volatility 101x, and I want us to look at the market structure. So if you want to clearly see the market structure, it's very, very easy. You can, zoom out the chart to see the market and the chart. Let's determine the market structure. And what do you see here? We have price has been bearish. How do you know it's bearish? If you look at this trend line, we see price is going bearish, and this price become bullish. But this is not how to determine the market structure. Let's start by looking at the chart here. Now, what do we see here? We see a high and we see a low. So because it is a bearish market, we will see price creating higher high and higher low. Now, this is higher low, this is lower low. So here, let's assume we have this low here and we have a break of structure here. Why is it a break of structure? Because we've seen that price has what? Has closed below this particular trend. This candlestick has closed below this low. So we see a break of structure. And what do we have next? Whenever you see a break of structure, you'll be left with what? A breaker block and the what? Order block. Now this is the breaker block. You can mark it, mark the body of the candle. This is a breaker block. This is the breaker block, right? And you have what? You have another block. This is another block. If you don't understand it, in the next video, I'm going to talk about the point of interest. You're going to get it. So we see a break of structure. It leaves us with bearish breaker block and bearish order block. So we see price, instead of coming to the order block, price was held at the bearish breaker block. So we see another structure again. We have another higher low, and then we have another lower low here. Here we have this here as our lower low. So we have another what? BOS here. That's the break of structure. And it will leave us with what? Breaker block and order block. So what do we have? We're expecting price to retrace into this level. And what do we see? We see price creating what? Retracement into what? Bearish breaker block. And eventually comes into the what? Into the order block. So what do we have again? We have another low here and we have a new high here. Do you see it? So this becomes our lower high and our lower low. So here we want to see a break. Do you see? There is no candle that closed below this low, not until at this level. So all this while we are still what? We are still bearish. But however, it has shows us that the market is ranging, because we've seen price range. So price ranged within the what? Lower high here and then the lower low here. So this price created a ranging market. So this is also a type of market structure. But at this point, we've seen that price has created what? A break of structure by closing below this particular low. All this while there was no candle closure below this low, not until at this level. So what do we see? We see a candle closure and then price went back to this level, creating lower low here. So where is our new high? Remember, When price break this, it leaves us with order block here, and also what? And a breaker block. This is the breaker block. So all this while price has been moving. So here we see price retested this breaker block, but did not close below this low. That means this range is still valid. And we see price heading to the what? The order block. Now at this level, price is still what? Is still bearish, because price came here and still come back to this level. But look at this, price did not take this low. So, and we see price moving bullish and take out what? This high. Look at this high, this last high. Do you see? Price close above it. As soon as we see this, we have to look at the range that take out this high by closing above it, and we'll have what? We'll have our order block here. That's the last of close candle, will be our order block, and also this one too can also be our order block. Then we'll have our what? Our breaker block. Here is the what? Is the breaker block. So what we need to do is to mark this. This has become our what? Our breaker block. So we have a closure and a breaker block. So what are we expecting? We're expecting that price should what? Should retrace and make bullish, because now the trend have changed from what? From bearish to bullish. Now we have what we call market structure shift. So after this, we see price retrace to where? Retrace into another block. Do you see this? This is another block. And then price went bullish. So here we have what we call the break of structure, bullish breaker block, and also order block. So here is the order block. That is the last down close candle. And also we have bullish breaker block. So do you see? Price came into the order block. And then what are we expecting? We're expecting price to expand and take out this high. Price to expand and take out this high. So we see price moved bullish, but later came back to what? To the order block again, because we are still bullish. So price came back to this before what? Expanding bullish. So here we have another what? Break of structure. And we'll be left with what? We'll be left with breaker block at this level and order block. So what do you see here? We see price expand. Now, right now, you should know that currently this is the price, and you know that price is bullish. Then what are you expecting? You are expecting price to come to what? To the what? The level, either what? The order block or the bearish breaker. And here you see, as soon as price closed above it, it came into the what? Into the breaker block, and then it expand. So right now, as we see here, price is bullish. So if you go to the 4 hours time frame, you can also determine the market structure. So let's start from here. What do we see? We see this high has been taken out by this expansion. So we have BOS, right? So after BOS, what do we have? We have the breaker block at this level. Don't worry, I'm going to show you a video on breaker block, because it was the last order block that was violated. And also we have another block here, which is the last down close candle. And what do we see? Price came into the what? The order block, and refused to touch the order block and went bullish again and created what? Another high. And then price came and what? Close. Here we see that price has violated this and then touch this, but here there is a trade for it. I'm going to show you how to take this kind of trade, but remember, this is inside the daily time frame, and this what is called the internal structure. Why? Because whenever you have a bullish trend here, you are expecting to see an internal structure inside the expansion. Yes, inside the expansion on the lower time frame, and then you will see a market structure shift on the lower time frame to facilitate the what? The internal structure on the retracement leg on the higher time frame. The same thing on the lower time frame, you will see market structure shift on the lower time frame to facilitate the what? This expansion leg on the higher time frame. So this is what we call internal structure. You can call it this internal structure, the black line as internal structure on lower time frame, and the overall structure on the higher time frame. So that is why here the overall structure here on the daily time frame, if you go back to the daily time frame, we will see that the price is bullish. You see, it's bullish, but it's giving us internal structure on 4 hours time frame. So here, this is how you can use market structure to determine the direction of the market. So in the next video, we're going to look at point of interest.